So we're looking at the calendar and it's Wednesday, February 4th, 2026, which means we are roughly 2 months away from April 1st. I'm Priya Chakraborty and my co-anchor is Nisha Bhattacharya.
April Fool's Day usually, but this year the Reserve Bank at India, RBI has something very real planned. You could literally call what RBI has planned a silver lining, but more of that later.
Right? It feels like RBI are about to flip a switch on all that silver that might be, just sitting in a drawer or a locker somewhere.
A massive shift. I mean, we're talking about trillions of rupees worth of silver assets sitting there doing nothing. For now, anyway.
Trillions gives a completely new twist to the meaning of non-performing assets or NPA.
But you're about to inform me that all that is about to change, right?
Right? Jewelry, coins, family heirlooms, that's all been, for the most part, dead capital just sitting there.
And the RBI is basically turning that into active money.
Okay. But when I hear silver loan, my mind immediately goes to like a shady pawn shop scene in a movie. Is this actually legit?
Oh, completely legit. Starting April 1st, Indian banks and NBFCs, the private lenders,
Yeah.
will officially let you pledge silver as collateral for a bank loan.
Without having to sell it.
Exactly. You keep the ownership, but you unlock the value. Silver is a formal financial product now.
There was one detail in the RBI's report, though, about small borrowers that really made me uh, sit up and take notice.
I think I know what you're talking about, the part about credit history.
Yeah. It says for loans up to 2.5 lakh rupees, there's no credit history required.
That's the real revolution here. I mean, think about an artisan in a rural village or someone with a small shop in a town.
They might not have a formal credit score.
Right. No corporate salary slip, nothing a traditional bank would usually look for. But what they do have culturally is silver. So, by waiving that requirement, the RBI is saying the silver itself is the credit history.
The bank trusts the metal, not the paperwork. I like that. But is this unlimited? Could a business owner just dump, I don't know, a huge inventory of silver to fund a massive expansion?
No, there's a cap. It's set at 10 lakh rupees per borrower. This is really designed for personal needs, you see.
You mean like a wedding, a medical emergency, or to bridge a cash flow gap for bank retirees?
Or maybe some working capital for that artisan we mentioned. It's not for big corporate leverage.
If you're enjoying this podcast, don't forget to subscribe to The Bloggerian and leave a comment with your thoughts.
Furthermore, please share it with others, post about it on social media like Facebook, etc.
Okay, so let's get practical. I walk in with, say, my grandmother's silver ornaments. How much cash am I actually walking out with?
They're using what's called the 75% rule. It's the loan to value or LTV ratio.
So, if the market value of my silver is 100,000 rupees,
So, you can get a loan for up to 75,000. Pretty straightforward.
it is. But I was looking at the fine print and it's specific about what counts. It says jewelry, ornaments, and 925 purity coins are in.
But
But raw silver bars and ETFs are explicitly out. Why would they exclude the purest, most standard form of the metal?
that's a great question, and it gets to the heart of their intention. The RBI wants to help the family, pensioners, and retirees that needs cash or income, not the day trader trying to game the market.
Ah, to curb speculation.
Exactly. You allowed loans against bullion. You could have people buying bars, pledging them for cash, using that cash to buy more bars. You'd create a dangerous bubble. This is about monetizing the household locker, not the investment portfolio.
That makes a lot of sense. But we do have to be honest here. Silver, it's not gold. It feels a lot riskier.
It is, without a doubt. Silver is much more volatile. Its price can swing up and down much more sharply and much faster than gold's.
So, what does that mean for the borrower and for the lender?
Well, for the lender, even though the rule says they can lend up to 75%, they might be more cautious.
So, a bank could look at the market and just say, sorry, things are too choppy. We're only giving you 60% today.
Precisely. Or they might charge a slightly higher interest rate than they would for a gold loan, just to buffer that risk.
And for me, the borrower,
The danger is real. If the price of silver crashes hard and your loan value ends up being more than your asset's value, the bank could move to auction your heirlooms much faster than with gold.
so you really have to do the math. It's not just free money. There are purity assessments, storage costs.
No, but it is democratization. It's turning a cultural habit into a genuine financial safety net for millions of people who might not have property or fixed deposits to their name.
It really is turning that dead capital into liquid financial power. But it makes me wonder if silver is now basically a key to the bank.
Okay, land the plane.
Are we going to stop buying those intricate necklaces and ornaments that lose some value when melted down?
And just start buying standardized coins instead? Function over fashion?
It's something to think about next time you visit the jeweler.
Thanks for listening to this deep dive. Please don't forget to subscribe, like, share, comment, and clip. Until the next time.